What's your take on the world economy? Will it crash?
No, I don't think we think it'll crash. We think it's fundamentally in a much healthier place than it has been, into any other cyclical downturn. The efficacy of fiscal policy, through the pandemic and the war, have really left private sector balance sheets in quite good shape. And so from that perspective, we still think that any downturn, even if it's been brought forward by the recent banking stress, is likely to be more shallow than deep.
Is there more banking stress to come?
I mean, that's very, very hard to say. What I would say is that it doesn't seem like, the U.S. has fully gotten a handle on the uncertainty around bank deposits and bank depositors, uninsured deposits. And as a result, I think everyone is on heightened alert. It is important that there is this implicit guarantee on deposits. I think policymakers have made that as clear as possible. Is that sufficient to stop the stress? Probably not. And then we start to get into business model issues with the regional banks as well. And so this is going to be a long-lasting, slow process to work through.
But Gene, if you look at, I guess, the possible credit crunch that's coming, how much does that do the Fed's work? And so what does it mean for treasuries, and where do you want to be invested?
Yeah, so I think, regional banks account for around 25% of credit to the real economy. 75% comes from the large banks and from the non-banks. Those are still in quite healthy shape. So I think it's probably premature to say that there's a credit crunch, but certainly it's a case where the Fed has lost control of the process. We think we think the risks are sufficiently high that you do want to play it quite safe. We think you want to be, given the rise in interest rates, given the rise in bond yields, bonds offer quite attractive returns, and even the safer part of the credit spectrum, investment grade, parts of the investment grade credit universe, we think offer very attractive yield without having to take a ton of risk.
But so in treasuries, where do you want to be invested on the yield
Probably
curve?
in the belly of the curve.
Okay.
I mean, I think the story there is, you can go to cash and earn a nice yield, but you do want some potential for capital appreciation because we do think we're moving toward recession. We do think in that environment, interest rates will come down.